Okay, a very good afternoon here on Jobs Friday, 5th of April 2019. Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference, and the Traders Open Day. And you join me here on the Elite Trading Room Journal, where we're going to complete our review for the week. As you know, we do a review every single Friday of all the year round, except for August, in which there's no trading, and the last 2 weeks of December. Other than that, a review all year round from the team here at Master of the Markets. The review primarily serves the purposes of us allowing ourselves to review our current trade performance, to get an understanding of where we are and where we want to be, to always be aware of course of the gap if there is a gap, so we can quickly bridge it. So let's go on to the analysis for the day. We'll start with the Elite Journal. Nothing across the Elite Journal in terms of closed trades this week. Nothing on the smart money strategy just there, or the swing profit strategy as well. No trades for the month of April thus far. The prime profits trading strategy is the one which we are focused on here today. The reason being because we are running an Aussie dollar short position at this time. It is still open with a very tight trade risk of just 17 pips, looking for a 90 pip target. So that would equate to a 5.29% reward risk ratio. The strategies in the Elite Trading Room are of course a lot more aggressive. By way of profit factor, we are looking for much bigger reward risks than anything else that we do. And of course that means that, they can get stopped out very quickly as well. This Aussie dollar trade we've been running for 2 days now. We are still in the trade. We are in a floating profit at the moment. So let's see if we can continue to progress on that one just there. And the gold bars, nothing for the month of April this month so far. So nothing closed, nothing realized by way of profit and loss on the Elite Trading Room this week. Just the Aussie dollar short position which we are running, as I say, in a couple of pips of floating profit at the moment, but nothing to shout home about. Let's take a look at the live trading room activity for the week as well. Money bars 2.0 cash. So you can see we are currently running a money bars trading opportunity on the Euro US dollar. I have handled the cash trade a little bit differently to the system rules. So I have done something a little bit different on the Euro US dollar. And I just want to walk you through my reasoning for that. So first of all, this is the money bars opportunity that you can see here on the screen. Let's go ahead and open this up. You can see that bar just there is the PSWB that we're dealing with. We entered the market on the close with the stop on the low, a nice tight 25 pips of trade risk from the stop to the entry. So only 25 pips of trade risk. Now the technical target for this trading strategy according to the system is this first green line just here, okay, which is 112.55. Now the market yesterday created an insider bar to the downside, not really too much activity by way of movement yesterday, but today again you can see even less movement. This is probably in the lead up to the jobs data that's coming out in 25 minutes from now. We'll see with that one what happens. We want to push higher. So as I say, the technical target according to the system is this first green line just here. It's 2.25 PSWB. That's what we use on money bars. Now, the target that I've set on the cash account is this one here, 380R10. So I'm looking for this 380R10 target. Whether it's realized or not, I don't know. What the outcome of the trade will be. Obviously, I don't know where it will get to if it gets to there. But we know that technically speaking, 55% of all phases travel to 380R10. And every phase this year on the euro dollar so far, from the beginning of January through till now, every phase has completed at least 380R10. And that's very important for us to note. I don't see why this phase shouldn't also complete 380R10 over time as well. Let's see what happens. According to the system, we should be making an exit here on this first green line. That would yield a 2% profit. Okay, if the price touches this green line after the jobs data comes out, then that will yield 2% profit. The initial stop according to the system is still on the low just here. Okay, still on the low just here. However, on the cash, what I've done is something slightly different. I have moved my stop to break even primarily because the primary actually came to 1 pip below 2.25 PSWB. And so I don't want to make a loss on this trade anymore, given that, we came within a pip of the target. That's the first thing. The second thing is that I'm using a 3 ATR10 target because, as I say, all phases this year so far have completed 3 ATR10. That's my first piece of logic. 55% of all phases complete 3 ATR10. That's my second piece of logic. The third piece of logic is to do with the weekly chart. So let's switch across to that just here. So if we look at the weekly chart, we'll see a couple of things straight away. First of all, we have a confirmed swing high. So the next swing to confirm should be, technically speaking, the swing low. Okay. Initially, you can see on this weekly that you've got the first primary, which is here. This is our first primary, and that is a failed primary just there. Okay. Then secondly, we've got the second primary, which is here. Okay, and that just recently failed as a primary around about 5 weeks ago, where you can see we had that spike lower just there. Okay, so that primary initially failed 5 weeks ago, and we had that spike lower. And so now we have the third primary IB. Okay, so this is a primary IB, and interestingly, it has not yet failed. I find it very unlikely that we'll get a phase where there'll be 3 failed primary and 3 failed primary IBs. I don't have the exact statistics yet. We're compiling this, but just speaking through logic, this phase is probably, this downward phase is probably reaching, I believe, the end. And this may very easily confirm as the swing low over the next coming weeks. If that's to happen, then the price needs to climb, which would far exceed our 3 ATR10 target. Let's be on the lookout for that. That's what I'm keenly looking out for at this time. So let's keep a firm eye out. And that's the reason for the trade, again, holding for 3 ATR10 is partly to do with the weekly. So an element of discretion exercised just here on this Eurodollar money bars trade. It's not actually something I normally do, to be honest. Normally, everything that we do is strictly followed and strictly done according to the system. In this particular scenario, I have made an exception. So nothing on the LTR journal for this week. Liftoff 3.0 cash, no new trades as well. Gold bars cash, nothing for April just there. On the cash in 3.0, we have a pending order for the Aussie. This is a beta strategy. It's in testing. We're rolling out a couple of signals. We do have a pending order to open on the low of this bar just here. According to the system, is already in. Our stop is on the high of this bar just here. According to the system, it's already in, still in the trade as well. So we're looking for this price to proceed lower, go ahead and break this swing low and take us out for a 3% profit target. That's what I'm looking for on that. Cash in is still pending. Nothing realized in terms of profit and loss this week for both the live trading room and the elite trading rooms just here at this time. So we will look to continue the analysis. We will look to place trades consistently. That's the core goal here. Using about 5% discretion here at Master the Markets, you can see that across all the other trading opportunities, everything is done pretty consistently according to the system. So just a touch of discretion in play just there. I want to talk about the topic of the week. Just before I do that, just want to run over the other world markets very quickly. And just before we go on to the world markets, you can see at this time that Eurodollar is still running strong here. At this time, we are up net profit at the moment around £1,000 on the trade. Our stop is just above the break-even marker. You can see our stop is 112.05, the entry at 112.04. So we are just above the break-even mark at this point in time. We are looking for 3 ATR10 target as well, so do note that. Let's go over to the world markets. Euro US dollar, you can see currently forming, as we say, that primary just there. We may see a new swing low coming into formation just here after the jobs data is released. It does look interesting at this time. We're 15 minutes away from that release at the moment. We may see the move higher, which is what I suspect. Let's see what happens. If that happens, then of course this is going to become a higher low in the market, which will satisfy the variation 5 setup. And then we'll take that as a cash in as well to take us long. It could be the start of a potential longer term trend reversal. Pound US dollar, you can see just here, pushing lower, has broken yesterday's low as well. So that one's an interesting pair. The dollar Swiss franc, not really doing too much again. Still, I spoke about this last week as well, still hasn't cleared the high of this IB -1. So there's not much we can do in the way of analysis. Lots of TEBs setting up across the market just there. The Euro Japanese yen is in a clear downward trend at this time. We can look for multiple opportunities on this, one of them being liftoff 3.0. We now have a failed IB -1, a failed primary as well. So let's keep looking out for opportunities on Euro yen to go short. Aussie dollar, as I say, we are short on that one at this time. The market is pushing just a little bit lower, but we'll see what happens in the next 15 minutes. That will declare pretty much everything for us. Dollar yen has pushed higher into this phase. You can see just there. We do have 20 moving average above 50 and 100, which means we're looking for lift-off opportunities long now. So we're looking for only long opportunities. The gold market has pushed down here a little bit since reaching its previous highs, but does look like it's on a longer-term clean, clear upward trend now, especially according to the weekly chart. So could be a good opportunity to get involved with gold just there. We have a very interesting pattern just here as well on this. This is of course a immediate failure PSWB, very important bar pattern, as I've been telling our coaching clients here on the elite coaching that are working with us at Master the Markets. This is not only caused the English channel failure of the primary, but it's also formed a PSWB as well. Very, very important bar pattern just there for reversals. Oil market proceeding higher, an upward trend. Let's take a look at Bitcoin. Look at the move on Bitcoin. Nice spike just there. You can see that at that time it's taken up around about $1,000+ just there on Bitcoin. Quite interesting because we may have reached a low just here, longer term low. So that is quite interesting at this time. $3,000 is around about $3,000 is where it reached in terms of a low. I still believe there's a little more downside on Bitcoin before we see longer term upside. So I'm not really too phased with this move. Let's see what happens very, very shortly over the next coming days and weeks. So that's it by way of those currencies. I want to talk about the topic of the week, which is all around Sunday data. I think it's a very important concept to understand. Let me switch over to a price action only profile. So first of all, let's understand Sunday data. Sunday data is only applicable in certain brokerage firms where you will have the market opening at 10 p.m. From 10 p.m. through midnight. So from 10 p.m. through midnight you will have the market opening on certain brokerage firms, and you will be able to note very quickly if that data is indeed applicable and valid or not. You'll see that on your charting. Now, when you're doing some testing in the market or when you're looking at bar patterns, it's really important to understand Sunday data and the implications of it, because it can be useful information to have, even though it is only 2 hours of trading. So the first thing to note, of course, is that Sunday data, generally speaking, will only occur on some brokerage firms, as I say. So let's take a look at the different permutations of what can happen with a Sunday bar. Let's say that this is our Friday data just here. So this is applicable for Friday. Then what happens is Friday night the bar of course closes wherever it closes, and on Sunday you're going to get around about 2 hours of trading. Now if the Sunday bar, let's say, opens up somewhere here, and then you get the Monday bar that comes into the market, which looks like this, then you can completely ignore the Sunday bar. The reason for that is because Monday and Sunday merge together as one bar. So they merge together as one bar. We don't count the Sunday and the Monday separately. They become one bar. And because they become one bar, we consider this pattern to basically be the equivalent of this. There is no Sunday bar in that pattern. However, now there are some exceptions, because let's say, for example, that the Friday bar looks like this, and then the Sunday bar gaps up here, and then the Monday bar maybe looks a little bit like this. This is an important bar pattern, because When we merge these two together, this will actually then look like this. It will look like this at the top, and they'll become one bar. Now we need to take into account the open on Sunday, because that would be the open for this particular bar, what it should actually be, and the high of Sunday as well. So the open of Sunday and the high of Sunday are very important in this example. But then we take the close of Monday and the low of Monday for our new bar just there. So this pattern actually becomes this pattern, and this is what's important. So in some cases this may be considered as a primary if that's valid. Okay, another scenario that you can also get with Sunday bars, again, would be maybe something that looks a little bit like this. It's just the inverse. It's very similar, but it's just the inverse. So what you'll have is something that looks like this. You've got your Friday bar just there. Then you've got your Sunday bar just there, and then let's say you've got your Monday bar. Maybe it looks a little bit like this. So again, in that case, it's going to match this diagram just here, but the only difference is that you take the low of Sunday and you translate that across, and the open of Sunday. This is very, very important, okay? So you take the low of Sunday and the open of Sunday, and that forms your new bar. So you completely discount Sunday bars because they merge into the Monday, but the way they merge into the Monday will change from time to time. So you should note these 3 diagrams here for how to handle Sunday bars. Very important. So that's how we tackle Sunday bars here at Master the Markets. And with that said, that's pretty much it from me for this market update. I look forward to speaking to you all soon. Until the next time, stay disciplined, follow your trading plan, and keep trading like a master. Bye for now.